Hello, everyone. It's Chad Bergman with Movement Mortgage. I'm coming to you at the end of August, and we have some interesting information we want to provide to you regarding OpenDoor and their business model. Personally, I got very curious about OpenDoor the other week when I saw a couple listings in my neighborhood of Roxborough. Saw that these OpenDoor listings were stagnant. They were on the property or listed for a while, and started to dig a little deeper. Looked at when they acquired the property, looked at how much they paid for it, and saw that they were taking a significant loss on trying to resell these. So it got me to think, is this a one-off, or is this a market occurrence, and what is happening in other areas of Metro Denver? So we had a local realtor pull some more data between Douglas and Jefferson County, and we are very surprised about what we found. And I brought today 2 other loan officers within my company, very well respected, knowledgeable, to gain their experience and opinion on this data as well. So I would like to introduce Aaron Brenner. Aaron.
Hey, Chad. I think this is our first group chat between you and I, and happy that you and I are finally collaborating on something for social. And this is definitely a really important topic that, realtors, buyers, sellers, people in the industry should be talking about.
Absolutely. Yeah. Again, you have a wealth of information. You're in the office, you're collaborating. I'm excited to, again, dive deep into it. So thanks for joining me today.
Yep, absolutely.
And then Jordan Chomko, thank you and welcome.
Yep, thanks for having me. I'm excited to kind of talk about some of the historical context with the iBuyers and the business model and what they're trying to achieve. So I'm very much looking forward to this conversation.
Good. Let's dive into the data and let's bring up that chart. So again, what we found between Douglas and Jefferson County as of August 24th, we found 88 listings. But let's kind of take a step back. Jordan, I know that you pulled up kind of what the iBuyer business model is, and I think it'd be good to kind of set the expectation about what they're trying to do.
Yeah, definitely. So if you look at like historical context with regards to the iBuyer model, it was really kind of brought about in 2014, kind of really reached its peak in 2019 with Zillow, OpenDoor, Knock, OfferPad, all of those entities kind of competing over market share. We've obviously seen, what has occurred with Zillow and, them kind of exiting the space and now kind of partnering with OpenDoor. OpenDoor is pushing into this and they're really trying to gain market share this year. When you look at OpenDoor is a publicly traded company. So a lot of the data is able to be accessed if you kind of do some deep digging. In the first 6 months of this year, OpenDoor has outspent from a marketing standpoint what they spent in all of 2021, which is kind of unbelievable. And then you look at the other thing that I think is really interesting is where is OpenDoor trying to make money, right? You have number one, the acquisition, right? What are they charging the seller? That's the first component of it. The second piece that they're trying to make money off of is the appreciation. That first component, they say that on the seller side, they're trying to make between 2 and 5% as a profit off of that. On the appreciation, they acknowledge that their goal, their target is between 4 and 12% appreciation from acquisition to sale. And then they even reference their ancillary services, title, mortgages, things along those lines. And their goal there is to make approximately 2.5%. So, what I think the data today that we're trying to focus on is kind of that middle component, right? What is their difference between acquisition point and disposition of the sale? And are they really making money? Because that is their biggest target, being that they're trying to target between 4 and 12%. So I think that's kind of where it references back to this data and kind of what is going on in the marketplace and maybe why it's not going how they had hoped to achieve.
Right. Well, again, we are in a different market. The market has shifted, and the expectation was the market was going to keep going up and up. And again, that's a great business model. I would make money in the stock market all day long if we kept going up.
Yeah.
You know, when you look at the numbers, you know, you look down the acquisition dates, you see a lot of Julys in there, a lot of Junes, a couple Mays here and there. Obviously, Chad scrolls down, you start to get back into the spring. 2022 is going to go down as one of the more fascinating years on record in real estate because, I mean, talk about a tale of two cities or a tale of two markets. You know, Chad and Jordan have been doing this longer than I have, but I mean, in the 6 years I've been doing this, it's incredible what a heavy sellers market it was from, I don't know, February, maybe early March, up until about late May, early June kind of thing, where, I mean, offering a kidney and a firstborn for a kid was not going to be enough. Or a house was not going to be enough. Homes being listed, you know, in Highlands Ranch for like 700,000, 750, they're getting offers for 900 without any issue. And then it's almost like overnight, it stopped and it went back the other way. And I think buyers said no mas. Buyers started to get accustomed to the fact that, whoa, rates are in the 4s. Whoa, rates are in the 5s. Oh my gosh, they're in the 6s from time to time. And so that certainly slowed a lot of people's roll. You see economic fears about, well, you hear all this talk about a recession. Consumer prices have gone up. You know, your eggs, your gas, your supplies, products, everything goes up in price. Well, then there's less discretionary income for home buyers. And so that's where just all these factors came together to sort of slow down the real estate market. And I think the data that we all see in front of us, you got OpenDoor going, uh-oh, because they went and acquired these properties. And you can kind of see from, you know, the acquisition column on the left, you see a lot of 4s, a few 4s, a lot more 5s, 6s, 7s. The median home price in Denver is around 700, you know, the low 700s right now. Right. But you see a lot of drops. You see a lot of drops in price. And what's going to happen is OpenDoor is going to be hanging on to this inventory until they don't. And in many cases, they're going to be selling it for less than they bought it for. And yeah, part of that is the market, but part of it is OpenDoor got very aggressive with some of their acquisition prices because they figured, as Chad mentioned a minute ago, well, I'm just going to keep buying stock because it's going to keep going up until it doesn't. And so, like I said, at some point, buyers say no mas. And then the current list price, if OpenDoor is able to get that, and we're not even factoring in, well, what happens if they take a lower offer? What happens if they have to give seller concessions to a buyer? What happens if they have to make further fix-ups or repairs or credits on inspection? Even before you get into all that, we factored in the 2.5% buyer's agent fee that the buyer's agent will collect. The taxes, title work, owner's title policies, we threw in a flat $4,500 there. And then on the far right-hand side, you see the estimated net profit, or in most cases, loss. And awful lot of red there. And that's really the main premise of why we're discussing this today.
Yeah. Well, I think it's also fascinating, too, again, how old some of these properties are. You know, some of these, again, were acquired, you know, late 2021. And they've been on the market for a long time. Probably, again, going through price reductions. There might be problems with the property. I don't know. That's where we need to maybe talk to some good realtor partners to see, again, if there's any stigmatized properties or other issues with properties, why they're not selling. Because they, and again, they could have maybe hit the market, you know, at different times. But yeah, it is going to be interesting to see, again, if we fast forward 6 months, take the same 88 properties, see what they netted, you know, in this transitioning market right now.
Yeah, I mean, you look at it, you've got 68 of them right now have a projected loss out of the 88. You know, 2 of them lacking data on acquisition in terms of what that was. You know, that leaves you with 18 that have a projected profit. That's kind of shocking. Obviously, Zillow got out for a reason. You know, OpenDoor has deep pockets. Based on what I'm able to find, you know, they have a lot of liquid assets to be able to float these times. But I think, Aaron, your statement earlier of that the transitioning market has maybe thrown up an even bigger red flag as to what are the consequences of a model like this if we do not have an extreme appreciating market like we have for, at least here in the Denver metro, the last 8-9 years, how does that impact it? And I think we're starting to feel that a little bit on that impact. So we'll see how it plays out over the next 6 months. And I think you're right, Chad, going back 6 months from now and looking at, what was the final price disposition, that will be interesting. The one other component is I don't think we know necessarily what they've put into this from an upgrade standpoint, right?
Absolutely.
These numbers account for any type of upgrades. And when you look at most Opendoor listings, when I tend to look through the data, most of them look like they have had some level of paint, carpet, countertops, things that are appealing to a consumer or a buyer. So that could, elevate these losses even further on that end.
And there's one other factor that we don't necessarily see in the data that I think is really critical. I sit here and I sort of think of crypto as a metaphor. And, if you invest $100 in crypto, okay, if it's in an extreme appreciating deal, that's fantastic. If it falls off, whatever. But using that analogy, if you bet $100 on crypto, the most you can lose is $100. There's not a lot of carrying costs into that. It's just $100. Most people with a little bit of savings can afford to part with $100. We can't ignore the carrying costs here either, because on the data, when we've put it all together, the total estimate is a net loss of $3.1 million. But that's just based on what they invested and what they sold it for. Think about the carrying costs, where if they have 88 homes that they've invested capital in, and I don't care if they're using private financing or just dipping into funds, like from a venture capitalistic standpoint. I just did the summation here. Guys, these 88 properties that we have listed have a total cumulative sum of $52 million.
And to that point, Aaron,
Yeah.
when I was doing research, I believe when I looked at the Q2 balance sheet that was reported to the SEC from Opendoor, I believe they had it's either 6.6 or $6.8 billion in held real estate assets.
Right. Because this is just Douglas County and Jefferson County. That's just two counties. That's $52 million in home. So $6.8 trillion. Again, it's like if I bet $100 at the casino and I end up losing $20, okay, I lost $20, but there's not really any carrying costs of $100 because anybody could take a $100 bill and do that. But if you have to invest millions or billions of dollars for more than a day, but for months and months, the carrying costs of that are, I don't even want to know what they are, but it's all reasons why, we just don't know how long Opendoor is going to be able to keep the doors open.
Chad, real quick question here. Do you believe that the partnership between Opendoor and Zillow will allow for Opendoor to modify their business model enough to make it profitable?
So I think the partnership needs to be revisited. I think the partnership needs to be more, it relies on confidence in just a normal buy-sell transaction. There's a lot of realtors that don't have a lot of faith or respect for the iBuyer model right now. There's a lot of frustrated buyers who try to make offers and again, on relisted properties. I think there's a lot of question, does the iBuyer possibly change the model as far as can it change the valuation of your neighborhood based on the acquisition price and the resale price? So I think again, iBuyer is super popular from the convenience standpoint. iBuyer is super competitive and simple in an appreciating market. But realtors earn their money in a tough market, and this is a tougher market. I would love to have a follow-up discussion with a couple of realtors to find out again what their perspective is on Opendoor when buying and selling and the conversation, and why would you use a realtor to sell your property versus an iBuyer? And I can almost guess that OpenDoor and any other iBuyer today is not coming in at a very competitive price, knowing that the market is softening. So I'd be curious to see kind of what those offers are versus what a realtor would recommend.
And to that point, Chad, I've had a couple agents on both sides, right? Representing a seller and selling to OpenDoor, and representing buyers and trying to buy an OpenDoor property. And I've had a couple transactions in the last 12 months where an agent came to me and said, OpenDoor is paying far more than what we could get on the market, right? We had to accept the offer because it was astronomical how much they were above what we would expect to receive. On the counterpoint, being representing a buyer, I've also had a few agents say the process just to show the home is very difficult. So do you have agents out there who are acknowledging the failures of OpenDoor and the ease of access to be able to look at it, to write a contract, to get an answer quickly, right? Because of the knowledge that OpenDoor owns the home? Possibly. And is that impacting the iBuyer model? To be determined, I think, at some level.
Yeah. Well, I found it fascinating too. A lot of the OpenDoor properties are actually virtually staged. I don't know if you saw that, but these are, and it actually looks decent. It's not in all the pictures, which I find interesting. It's only maybe in the first couple snapshots of the property where it has furniture digitally put into the room. But yeah, again, not the same quality or expectation that you would want from a realtor. And again, you pay for what you get, and it is going to be interesting to see again how these properties dispose of, and again if it's going to continue.
Yeah. What does it mean for buyers and sellers? For buyers, certainly. I mean, we're all, of course, we're on your side as the lenders, right? We primarily work with buyers, and it's a tough market to navigate. It's certainly easier than it has been in the past to go get under contract. Certainly, if you're an investor and you're looking at an opportunity to get in the market, you have to be careful because we don't know what the future holds as far as the next few months or 6 months or year or whatever. But certainly, the majority of real estate investors would say you buy and hold, and look at any given one of these properties that maybe it's listed at or could be acquired for $600,000 or $800,000. Over the course of time, it's likely to appreciate. It's likely to be an income earning situation. So there could be some opportunities there, particularly for OpenDoor properties where they're probably pretty motivated to sell. For sellers, particularly for sellers, that's where this whole conversation is geared toward. You have to be careful when you get that letter in the mail from OpenDoor and it says, we expect the valuation of your home to be whatever, and it gives you a range and all that. Yeah, there's no free lunch in life. And Chad alluded to the convenience that a lot of people seek, where it's like, well, I just want to take a cash offer, and OpenDoor, Knock, Orchard, a lot of these places that advertise on Facebook, they're essentially cash buyers, and that's great. But it just goes back to that old adage, if it sounds too good to be true, it probably is. And so you just have to be aware. And we on the lending side, as well as real estate agents, have been beating this drum for years about this is what you're getting into with an iBuyer if you're considering using an iBuyer to sell your home rather than a live real estate agent. And you should compare and contrast, but just know that the fees aren't necessarily cheaper with an OpenDoor or any other iBuyer. And again, just talk to a neutral third party, talk to a lender about what does it mean if I use a real estate agent versus an iBuyer to sell my home, because I mean, frankly, we don't have a dog in the fight, so we can advise that way. But it really just comes down to be informed, talk to people who are education based, and use them as a resource so that you have the best information possible.
Right. Jordan, any other last thoughts on our data? I know, again, you like the numbers.
Yeah. I am really going to be intrigued, and I think that this will be a great conversation to have 6 months from now, right? And retrack the data as far as where did they end up coming in officially as a loss on this, because they're obviously not going to make money from the appreciation component. So I'm going to be very intrigued to kind of continue this conversation 6 months from now when we have all the data on how all these have been sold, and continue to watch what happens with the model as a whole, right? And do they have to adapt in order to become profitable, right? When you're running at about an 8% loss annually, that's already into investors' pockets. And at some point, are they just going to say no more? So we'll see.
Yep. Well, again, we wanted to bring this to you as an educational point. We would love to hear more stories and personal experience, because again, this is being pushed out to our realtor partners, and also probably our past clients, current clients. But again, everyone has a different spin, a different story, and we would love to hear your side of it. And again, we would love to maybe follow up with an additional video to, again, dive deeper with the realtor conversation, or even someone that went through an OpenDoor sale. I would love to hear, again, how that process went, good or bad. So again, I'm Chad Bergman with Movement Mortgage.
Aaron Brenner, also Movement Mortgage.
And Jordan Chanko.
All right, again, thank you again. Have a great day, and we'll be talking soon. Thanks.